It's Walter here from Naked Forex, and I want to talk a bit about your life, basically, and what you can do to improve your trading. A lot of times we, as people, we tend to look at things and say, "Oh, that was bad luck," or "that this was good luck," or whatever. And that's true. Some things in our lives are the luck of the draw. So, for example, the way that you look, the family that you were born into, although I suppose you could divorce your family, or you could also change the way you look. So you have some control over those things too. But a lot of things that happen in life basically come down to two things. It's the luck of the draw, and it's your decisions, and that's about it. If you want to learn more about how to take a small $1,000 account and grow it a lot quickly over the course of 300 trades, you can go into the nakedtradingclass.com. It's nakedtradingclass.com. That link down here or up here, somewhere around here. That will get you into the course. It's free. Now, let me talk about the way I look at this. There are three things basically that I try and do to refocus on what's important. Number one is I have to decide, am I going to be a follower or am I going to be a leader? Now, I'm not saying that you shouldn't follow other traders and learn from other traders. That's exactly what I did. But what I've done is I've taken what other traders have taught me, and I've tweaked it, I've tested it, and I've made it my own. That's very different to simply like plugging in every trade that every other, that some other trader does. That can be useful in the beginning, and I certainly did that in the beginning. But eventually, what you're gonna end up questioning them, and the reason why is that's a normal part of the relationship. The mentoring relationship works like this, and this is from psychology, by the way. I don't know if you know, but I did a PhD in psychology, which doesn't really matter. But it does mean that I'm able to read the research in psychology and learn about things like cognitive biases and mentoring. And what it turns out, this is interesting. When it comes to mentoring, we actually typically go through a process where we learn everything we can from our mentor. And then in the end, we think that we're better off than our mentor and that we can do it better than he or she can. And then we go off on our own and we decide we're going to prove that we can. That's actually a very healthy ending to the mentoring relationship. So we have a lot of traders that come into my private forum at Naked Forex Now, and when they leave, I'm kind of happy. I like the fact that they feel like they're on, they're ready to go. They're confident, and they're off. I only wish that they would let me know how they're going later on. That's all. That's my big thing, is that I only hear from the traders who are still having challenges. And very, very rarely do you hear from the traders who are doing well, because I know there are plenty of them out there. So I have to reach out and ask myself, but that's okay. So if you're going to be a follower, then what that means is you're not really going to construct your own way of interacting with the markets. But if you're going to be a leader, you can take elements. So I've learned from Dr. Alexander Elder. I've learned from Thomas Bulkowski. I've learned from, there's a guy named Scott Barlow. Probably the most interesting trading interview I've ever read was one by the name of Scott Barlow. You may not have heard of him. He's here in Australia, and his interview is in the book called Everyday Traders by Nick Raj. Highly recommended. He's the only currency trader in there. The rest of them are all options and indices and stock traders. But the Scott Barlow interview really changed my outlook on trading. And so what I've done is I've taken these elements and I've used them for myself. Hey, T. Hey, Yam. Great to see you guys here. Couple of people, more people coming in on the live. Cool, great to see you here. So if you take those elements from other traders and you test them in Forex Tester or whatever you do to verify that it works, demo trade, all that stuff to build up your confidence, you're a leader, because you're defining how you're going to interact with the markets and not letting someone else do that. By the way, that's the long-term way of doing it. If you do that over the long haul, you will stick to your strategies. If you do that over the long haul, you will break the cycle of doom. That's the way, is to take what you believe in and trade it rather than what someone else believes in, because we all have different views on the markets. That's thing number one. Thing number two, and again, if you want to learn how to grow an account quickly, go to nakedtradingclass.com and you get the 3 ways. Okay, thing number two, make the exit decision, or you can let it be automated. Now, what do I mean by make the exit decision or let it be automated? What I mean by this is most of us are discretionary traders. So we look at the markets and we say, oh, I'm going to get in, or I'm not going to get in, or whatever, which is cool. That's what I am, right? I have systems. I use those as a template to view the market. And then I say, yep, that's a trade. All right. But here's where it gets tricky. On the exits, it gets really difficult because a lot of traders are thinking, you know what? If I had just done that, I would have been better off. Or if I had just waited, or if I had just taken profit last Friday, or whatever. I would have been better off. So if you offload that decision and make it an automated exit rule, and you could even have it programmed. If you don't know how to do that, you can have someone do it for you, like I do, and place that on the chart so that the exits are not your responsibility, that your whole responsibility is to make sure that your automated exit is running and it's working and it's going to get you out of the trade. And number two is that you make the right decisions at entry. If you can just do that, you've actually you relieve yourself a lot of the psychological baggage that you get when you have decisions that are always going to be wrong. It's always the case that you could have had more profit, or that you could have had a smaller loss, or whatever. There's always going to be those cases. It's rarely that you get out at the perfect apex of a move. So it's difficult psychologically to handle that. And so one way to do that is to offload that decision making. That's what I learned from Scott Barlow, by the way. But he has a much better way of getting his point across. Okay. Number three I want to share with you is that we can decide to either focus on the pot of gold, or we can focus on the uncle point. And this is your decision. Most traders, when we get into trading, we're focused on the pot of gold. We want to make a certain amount of money, or we want to get rid of our job and just trade for a living, or whatever it is. But here's the interesting thing. If you get a little bit further away from that and you start trading, what becomes more obvious is that it's the pain, it's the uncle point, it's the drawdowns that really affect you psychologically and performance-wise. Are you executing your strategy, or is it a little bit more difficult because I've had 17 losers in a row? So, and so when you go into trading, you're either doing your calculations and trying to figure out either A, how much money you're going to make, or B, how to avoid that terrible drawdown. Now, typically what happens when we get in is we look at how much money we can make, and we forget to look at the other side of it. And then as you get more advanced, of course, then you start looking at how much could I lose here? And sometimes you might overemphasize that. But you have a choice. You can look at both. And we've talked about this in other videos. You can use the risk calculator that I've put in other videos. You can use formula to figure out, what am I doing wrong here? Or what can I do better? And that's really a way of going into trading with a mindset that, look, I know I'm going to have a 20% drawdown or a 30% drawdown or whatever it is, but that's worth it to me because I know I'm also likely to hit my goal. And so that's really what trading comes down to, is that balancing act. Sure, you can always go out and risk half of your account on a trade, but what are the chances that you're going to blow up your account? Probably pretty high. And yeah, you can always risk a 1/10 of 1% on a trade, but what are the chances that you're going to reach your goals, your monetary goals, if you do that? Probably pretty low. So it's obviously a balance point. And the last thing is, I think that a lot of times we overemphasize our influence on our trades. And the reason why I'm saying this is because typically what happens is when we have a bad experience or a bad run of trades, we might blame things like the broker or the markets or the news or things like that. So it's not our fault. And I do that. I'm just as guilty as anyone else. But when things go our way, we tend to de-emphasize the luck factor, right? And we say, oh, we're so good and I'm just hitting my stride and that sort of thing. I'll never forget the first time I started trading, the first week, my friend and I took my money. We opened up an online trading account. There were very few online brokers at the time. There were two, in fact, or two that I could find anyway. And this was in 2001. And we tripled the account the first week, actually the second night. The second night of trading the London market, we tripled the account. And so we had visions of Lamborghinis in our heads and all that. We were really excited. And by the end of the week, the money was pretty much gone. We'd blown it up. And so the important thing to point out here is that everything is possible. You can make a boatload of money trading, and you can also lose it all trading. But you get to decide which end of the balance sheet scale you're going to be heavily weighted. Are you going to be more heavily on the risk side, knowing that you're going to have some serious drawdowns, or more on the risk management side, knowing that you're probably not going to accelerate the growth of your account that much? So I hope that this helps. You can go to nakedtradingclass.com, click the link below or above this video to get into that class. It's free, and we'll show you 3 ways to grow an account. Again, probably one of them is going to resonate with you, maybe not all of them. And if you really like what you see, you might even join us in the Small Accounts Big Profits course, where we're taking a small account and we're growing it exponentially over the next 300 trades. I wish you happy trading. Thanks so much for spending time here, and we'll see you soon. Bye.